Why is Carl Icahn complaining about Occidental? Why isn't he happy with Occidental's deal to buy Anadarko?
Carl Icahn has been going on for months about this. He's been trying to replace the entire board at Occidental. He's really unhappy with how the shares have been down off over 20% since they announced a deal for Anadarko in the spring of last year. And he even said that Occidental, teaming up with Warren Buffett, which Warren Buffett put in $10 billion into this deal, he thinks that Buffett took the management to the cleaners. That's what he said over last summer. So Carl Icahn really not happy with Occidental's management.
So, obviously, we know Icahn's a tenacious guy. Getting into a tussle with Berkshire over this seems interesting. And I'm wondering, where does it all end? Because this has been dragging on for a while. What's the strategy here? What's the next step?
The issue for Icahn is that there hasn't been a shareholder vote yet on the deal. That's something that really incensed him. And we'll see when the annual shareholder meeting will be. Last year was in May. So this could be playing out into the spring and summer, because that's when shareholders will get a chance to vote on whether they want Icahn's nominees or Occidental's.
Okay, so it sounds like he does have a chance to replace Occidental's board.
He's already nominated directors, and he's also suing the company in Delaware for records. That's a common thing we see from activists. He wants more information on all the events that led up to this huge takeover.
All right, let's talk about another deal out there, Speedway. These are gas stations. A lot of people, if you drive through the Midwest, you've seen these things.
And increasingly in the Northeast.
And in the Northeast, too. I don't drive through the Northeast.
I've seen some in New Jersey.
I'm a Midwest boy. But anyway, so when you get out there in the Midwest, the great Midwest of the United States of America that Scarlett hasn't explored, you see all these Speedway gas stations. And apparently now they're up for sale. And the owner of 7-Eleven, TDR Capital, they're interested in this?
It's so TDR Capital is the European buyer. 7-Eleven's Japanese owner is also interested. So they're sort of in a mini bidding war for this asset.
Oh, it's 7-Eleven versus TDR.
Right. We have at least two bidders. My colleague Scott DeVoe has been all over this story with a bunch of scoops. So basically, we're waiting to see what Marathon does. They've already announced a spinoff of this asset into a standalone company. So now the company has to decide what creates more value for shareholders: selling it for over $20 billion to one of these bidders, or spinning it off.
And what are other investors in Marathon indicating? What's their preference in terms of which owner?
Shares are up today, so clearly there's some benefit from selling this. It might be a quicker benefit, but there could also be a tax benefit to a spinoff. Elliott Management, the activist investor, they helped put Marathon in this situation. They had a settlement with the company last year, so there has been some shareholder dissent causing Marathon to make these moves.